The uncertainty over Britain's future in the wake of the EU referendum has been wreaking havoc on global financial markets, with the pound slumping and global stocks tanking. There's a similar trend in Korea, except we saw a slight recovery on Tuesday. Minyoung looks beyond the numbers.
Most Asian stock benchmarks started low on Tuesday amid concerns over Brexit and market fallouts, but mostly saw a slight rebound at the close. In Korea, the benchmark Kospi and the tech-heavy Kosdaq both closed 0.49% and 1.72% higher respectively, after opening around 1% lower on Tuesday morning. The foreign exchange market also remains volatile. The Korean won continued to weaken against the greenback, trading at 1,171 won, falling 11 won from Monday's close, as investors flee to safer assets. Japan's benchmark Nikkei 225 ended 0.1% higher at 15,323.14 after falling to as low as 14,987.79 earlier. The Shanghai Composite Index in mainland China also saw a recovery, edging up 0.39% at 2,907.07. U.S. stock markets dropped for the second straight day on Monday. The Dow Jones Industrial Average and the S&P 500 fell 1.5% and 1.8% respectively. The tech-heavy Nasdaq slumped 2.4%. Analysts say the market will remain volatile for some time as uncertainties linger over Britain's decision.
It's uncharted territory. We don't know what the effects are going to be in Europe and globally, so investors automatically just feel somewhat reserved from being in the market.
European shares rose for the first time in 3 days, attempting a recovery after Britain's vote to leave the European Union. London's FTSE index opened 1.6% higher, while French CAC was up over 2% and the German DAX rose 1.8% in the first few minutes of trade. Meanwhile, the UK was hit hard as S&P Global Ratings lowered its credit rating for Britain to AA from AAA, saying the outlook on the long-term rating is negative, adding to investors' anxiety. Another concern is the plunging British pound, currently floundering at a 31-year low against the dollar on Monday. Minyoung, Arirang News.